The defined contribution plans are the plans under which the company is committed to paying contributions each year to a management body that will pay back these amounts to the retired people, former employees of the company. The contributions are calculated for each employee, depending on its salary and seniority. The management body buys assets in order to make the contributions grow during the period when the company pays them and when the entity has to pay them back to the retired people. If the management body made poor investments, the company does not have to bear the risks taken by the body, and it has not to pay the unpaid contributions. Insofar, there is no risk for the company. The contributions that are paid are registered as expenses of the year under IFRS and French GAAP.
Study more closely the retirement benefits, considering the following practical case study. EOL wants to estimate the amount of the pension obligations based on assumptions consisting in the retirement benefits to pay to its employees. For this analysis, we will consider the employee named Jean. Jean is 50 and has been working for 20 years in the innovation department. Jean has an annual wage of 15,000 euros. Let us assume that we have the following assumptions in year N. Retirement age of 65, annual rate of increase of the salary of 5%, constant annual riskless rate of 4%, annual rate of employee turnover 6%, probability of presence of 94%, mortality rate of 2% per year, probability of survival of 98%. The goal of this practical case study is to calculate the pension obligations of EOL based on assumptions consisting in the retirement benefits to pay its employees, and particularly to calculate the one of Jean. Hereafter, we will use the acronym RB to talk about the retirement benefits of the employees. The amount of RB paid when the employees retire is equal to the accumulated rights of the employees multiplied by the probability that the company pays those benefits and by the discounting of those benefits. In a first step, let us determine the amount of accumulated rights of the employees. The accumulated rights of the employees is equal to 2% of the seniority in years multiplied by the amount of the last annual wage. In a first step, calculate the future seniority of Jean.
Jean is 50 years old, the retirement age being 65. Then the future seniority of Jean is estimated to 15 years. Jean has now 20 years of seniority inside EOL. Thus, when retiring, Jean will have a seniority of 35.